Hey everyone, this is Neha from Eagle Eye Forex and welcome back to my YouTube channel. This video is going to be your ultimate guide of using time frames in trading, whether you are trading currencies or stocks. Time frame in Forex trading means the unit of time that price chart you are viewing is based on. For example, in a weekly time frame using Japanese candlestick chart, each candlestick represents 1 week of time. That is same in a 5-minute time frame candlestick chart, each candlestick represents 5 minutes of time, and for 15-minute chart each candlestick represents 15 minutes of time. Now the question is which time you should be using, or how would you know which time frame is suitable for your trading style, whether you are a swing trader, day trader, or even a scalper, or how can you do technical analysis and charting like professional traders. To know all of these things, you need to learn this multiple time frame analysis technique to build a profitable strategy, and trust me, this video is going to be a game changer. This multiple time frame analysis technique that I'm gonna teach you today will make your trading strategy much more effective and easier. If you're new to my YouTube channel, please subscribe and press the bell icon so that you don't miss any upcoming videos. So first, we'll go through the list of topics you learned today. First, you learn different categories of time frame using a scale and which time frame will be best for your trading style. Next, we'll broadly define multiple time frame analysis, that is obviously most important topic of the video as well, and elaborate which set of time frames you should really focus on before analyzing charts and taking any entry. Then I'll teach you how to draw golden zones or important levels using MTF accurately. Some people use supply and demand or support and resistance. After making everything clear, I'll teach you an amazing profitable Forex trading strategy that are personally aligned with multiple time frame analysis, and finally we'll reveal some pro tips from professional traders. So first thing first, there are many time frames on our screen. We have the 1 minute, the 5 minute, the 15 minute, the 30 minute, the hourly, the 4-hour, daily, weekly, monthly, and so on. If we just divide them into two categories, we'll get the lower time frame at the left side, that is from 1 minute to 30 minutes, and the higher time frame at the right hand side from 1 hour to daily, and so on. I personally use 15-minute time frame to spot the entry and to set the stop loss for my trade. You can tell me your favorite time frame that you mostly use for execution in the comments down below. Now the most important thing to be a consistent trader is building a profitable trading strategy that works for your trading styles. I'll tell you how can you decide an appropriate trading strategy on the basis of time frame that you mostly use, and for how long you should hold the trades, because you cannot trade whole day. You might be working 9 to 5, or you may have other works to do. So the time that you can put in trading without any distractions is important, and you should be trading only in that time. It will be clear with the help of this example. So here we have position traders. The analysis is based on weekly or daily, and they hold positions up to some days, weeks, or months. But for this, big liquid funds are required. Usually banks and big institutes that have large liquid capital to invest come into this category, and they really have significant impact on market price, or you can say they can move the market rapidly, but that's more a fundamental thing. So we'll stick to technical analysis for this video. Next, we have swing traders. The analysis is based on 4-hour time frame, and they hold trade up to few hours or days. They don't have much impact on the market prices. We have day traders. They use hourly time frame and hold trades up to few hours. Lastly, we have scalpers. They use up to 15-minute time frame for executing, and their holding period ranges from few minutes to few hours. So now it might be clear that which type of trading style you are using or you prefer to use depending upon the time you can invest in trading. Remember that in order to become a successful trader, you need to track the footprints that these large institutes or banks leave on the chart on higher time frames, and that's where the multiple time frame analysis come into place. Let's move to the main topic of the video, that is multiple time frame analysis. It's a trading approach in which we use higher time frames to read market structure and the lower time frame to exit and enter trades. Basically, the idea behind this approach is to go with the main flow of the market and not against it. So for this, you'll start your analysis from higher time frame and go through all the way down to the preferred time frame that you commonly use for your entry and exit. Now I'll teach you how to do multiple time frame analysis. Let's do an example now. This is pound USD 1 hour time frame. And look at here, being a trader, the first thing that comes in your mind is that whether you should be looking for buying or selling opportunities. So to answer this question, you should take a look at the big picture of the market and break down the market structure from higher time frame to lower time frame, and ultimately you'll get the answer. So let's switch to a higher time frame. Let's say the daily. Zoom out and adjust the chart. So by the market structure, this is clearly an uptrend. The series of higher highs and higher lows indicate that market is pushing to the upside. Remember that in an uptrend, we'll always be looking at buying opportunities because the trend is always your best friend and you'll never go against it. Now the daily time frame says that you should be buying, but wait, you cannot execute now. For the entry, we'll scale down to the 4 hour time frame. So yeah, on the 4 hour time frame, the market structure looks in favor to the daily with a series of higher highs and higher lows. You might have got the answer that you'll only be looking for buying opportunities, but where should be the exact entry or exit? For that, we'll switch to the entry time frame, that is 1 hour. At this point, you can do two things for entry and exit. Either you can use indicators like RSI or EMAs for confirmation. There's also a video on my YouTube channel on how can you take perfect entries with RSI. Or secondly, you can use your strategy that you usually trade. It might be supply and demand or Fibonacci retracement, pivot points, and so on. But remember that you would not go against the higher time frame and with the trend, because counter trend trading is too much risky for the beginners. So just wait for the correct setup instead of taking unnecessary losses. You can use any 3 time frames you like as long as there's enough difference between them to see a difference in their movement. For suppose you choose the 30, 15 and 5-minute time frame, you'll not be able to see significant price movements and make good trading decisions because there's not enough time difference between them. But don't worry, I've prepared everything for you, my friends. So if you're a scalper, you might use the 1 minute, 5 minute and 30-minute, or if you're a day trader, you might use the 15-minute, 1 hour and 4-minute time frame. For swing traders, 1 hour, 4 hour and the daily would be the best time frames. And finally, the position traders might use the 4 hour, daily and weekly time frame. Let's move to the next example. This is USD JP by 15-minute chart. It is unpredictable at this moment whether you should go long or short. So here MTF will save you from the market. Let's see how. Open up a higher time frame for suppose hourly and adjust the chart. The market structure is now clear. The series of low highs and lower lows indicate a strong downturn, so we'll be looking for sells. But before that, let's step back to 30-minute time frame for more clarification. And the 30-minute time frame is also in our favor to the hourly. Low highs and lower lows indicate the downtrend. I'm using a trend line that will help us to execute the trades at the time of entry and exit. You can use any other tool or indicator as well. So now we're 100% sure that selling will work best in this situation. Now lastly, we'll focus on the entry time frame, that is 15-minute chart. So here, with the help of just a simple trend line, you can take easy sell entry, put your stop loss above the trend line because the market is rejecting this level and selling will be the best choice here. The beauty of multiple time frame analysis is that with less than a few minutes you can have full idea of what's happening in the market, and secondly, you do not need any special indicator or tools for this. Thirdly, it works with all type of trading styles. I hope that the basics and importance of using multiple time frames is clear to you guys. Moving on to some more examples using zones. So a zone is kind of a level on the chart where price is likely to react, so it's quite important to learn about zones. Some traders use supply and demand zones, some traders use support and resistance, pivot levels or pivot levels, and so on, which is perfect. Okay, so I'll teach you how to draw zones and then we'll do some examples. So this is pound Swiss 1 hour chart. Look at the chart and try to find the imaginary line where price has rejected many times recently. A candlestick with large wick and small body would be great indication, just like this and this one to spot the rejection. So if you look here, there are several rejections on the same price level. Here, candle with large wick and small body, here is a rejection, and here as well. We can see that this is a strong zone, right? So let's draw this using a rectangle tool covering only the wick of the reversal candle, and here it is. In the same manner, we'll draw a zone here starting from wick of the rejection candle. So how the price has rejected this level, you could look for buying opportunities here at this rejection, because after rejection it is clear that price will bounce back towards this zone. Now if you further extend the zone and wait for rejection at this level, this would be the most profitable setup, because we know that this is a pretty strong zone, right? So finally here's a rejection to this level. Price is moving to the upside, indicating a clear reversal. Let's execute the trade plan and open up a buy position here. Stop loss will be below the zone. Target profit would be at this level. Now let's see if the plan worked. Perfect setup. The key is to identify strong zones, and remember, not every zone is strong. With the same method you could take sells here, because price is still respecting the previous level. Wait for the rejection and take easy sells. Now what if the zone is not respected? This would be an example of continuation pattern. For that, I'll just clean up the chart and remove these positions. The previous zone still seems valid, so we'll just extend it to the left. You can see this is a clear break of this zone. There's no reversal candle, no wicks, only big red candles pushing price down. This happens during a news event. So if you see a break of this zone, just wait for the first candle to close below the zone and take your position. I've shown two most profitable ways to trade zones in the easiest way possible. Now I'll teach you the perfect strategy that I use 80% of time in my trading, and most of the successful traders use this as well. In this strategy, I'll simply combine multiple time frame analysis with support and resistance to get the best possible entries. So you ready? Let's get started. This is gold 4-hour chart. I'll be using 4-hour, 1-hour and 30-minute time frame for this strategy. On 4-hour and 1-hour, we'll analyze market structure, and then using 30-minute, the lower time frame, we'll take our position. Starting with the 4-hour chart, zoom in 2 to 3 times to get a clear picture. First thing first, you need to find out the recent support and resistance zone. So here's the recent resistance level because of these rejection candles. So just grab a rectangle tool and draw the zone. I'm using line to highlight the zone. That will help me to visualize the exact price level. Now if the price breaks this resistance level, there's a high probability that it will touch at least this zone or this level at least. So these both would be our profit targets in case of buying comes into play, but I personally secure 80% of my positions on the first target profit. Moving on, for selling opportunities, we need to identify the recent support, because we need to prepare for both situations, either buying or selling in any case. Look at these large wicked candles. These wicks indicate a strong support level. For selling opportunities, we would want a candle to close below this level. Let's find the next support for our potential profit target. So I think if the support gets broken, there's a high probability that we'll at least continue to this level. So we have marked the recent support and resistance on higher time frames. It is clear that the market is ranging on higher time frame, and we have to wait for the break of support or resistance to take any entry. And for more confirmation, we'll test our levels on lower time frame. But before that, I'll just label the levels, so at least on the lower time frames we don't get confused and everything is clear. This is 4-hour resistance. We are looking for potential buys above this level, and this is support on 4-hour. We are looking for potential sells below this support level. This is our target in case of buys, and this was our first sales target. So now we'll switch to 1-hour time frame. Our levels are perfectly drawn, and you can see how the 4-hour levels are still valid on the 1-hour time frame, and the market condition is same in the consolidation. That indicates our trade plan for waiting for breakdown is perfect. Let's move on to see if the price breaks any of the levels. So at this point, this rejection candle and the big bullish candle next to it indicate that price is likely to move to the upside and it will break the resistance, so we'd rather look for buying opportunities. After doing analysis on 4-hour and 1-hour time frame, it is clear that we'll be looking for potential buying opportunities after the break of resistance. Now we'll move to 30-minute time frame chart for execution of trade plan. So let's move to the right and see if we can execute or not. So this rejection candle and the big bullish candle next to it indicate the buying pressure is in the market. So you can either put buy stops right above the resistance, or you can simply place the trade at that time. The first profit target is hit with the 0 drawdown. Let's quickly do a recap of the complete strategy. You just need to choose any 3 time frames, draw important zones on higher time frame, learn the price action, and finally execute your trade plan. And with the patience and practice, nobody can stop you from being profitable in forex trading. Now is the time to reveal some pro tips. So the most important tip is that you should schedule your trading hours and stick to that plan instead of trying to grab every move. This will prevent you from over trading. Next tip is, while charting, always plan for both selling and buying and mark your levels accordingly. This will prevent trading opposite to the plan. Tip number 3 is never trade against the trend until you are an experienced counter trend trader. Another important thing is securing positions or closing some percentage of your position. This will help to keep your losses small and let the profits run. For beginners, the tip is to practice multiple time frame analysis and take only 1 or 2 trades daily and call it a day. It will make you a disciplined trader. Lastly, I'm excited to announce that we're managing Forex accounts to help you achieve your financial goals. In case you are still struggling with forex trading, just contact us on Instagram and give us a chance to trade your forex account. We will take care of your hard-earned money and never let you get broke until you become a successful trader. That's it for today. If you find this helpful, please hit the like button, and if you have any confusion, you can ask me in the comments down below. Thanks for watching.